All right. So here, let's take a look. So we just finished our in-store sales for the 27th, right? We updated the inventory, deposited the money. So then now we are finally on Friday the 28th. And once again, Albert submits another order for Super A Market. So in this case, Super A Market only wants to buy 65 pounds of coffee, the regular coffee, and 50 pounds of the Supreme coffee, and wants to buy 18 coffee mugs. Okay. And of course, right, grand total is going to be $533 and 17 cents. We're not going to be expected to deliver this until the 30th of June. Okay, so what do we do with this here?
This will go into Albert's commissions.
Right. Albert's commissions. We're going to be delivering to Super A Market for $533.17. Okay. Right. Friday, not much going on. So last thing that we have here is we are going to be doing another daily sales. Okay. And then after that, we're going to process payrolls. So let's go ahead and complete the in-store sales for Friday, June 28th. Okay. So same exact journal, right? We're just going to copy this and paste it over. Okay. For June 28th. Okay. Right. So how much medium regular coffee? $477.60. Okay. How much large regular?
$5.98.
$5.98. Okay. How much medium?
Put it in the wrong cell.
Oh yeah, give me a second. Let me see. So this one should be 477.60, 598. Not this one. Okay. 598. What's the next one?
610.05.
610.05. $701.49. Ceramic is $34.95. Taxes $199.82.
You put 374 for the ceramic mugs.
$374. I'm sorry, my fat fingers. Okay. So there you go. You should get a grand total of $2,621.91, which matches my. Okay. So next one. Ledger. Or unless you want to deposit the money first. Your choice.
Can deposit.
Let's deposit the money first just so that we can ensure that we have the money in our checking account. So 2621.91. So in this case, a little more than yesterday. All right. So we can plug into our ledger, starting with checking. For in-store sales for $2621.91. So in this case, how much money do I now have in my bank account? Sorry, my finger slipped. So in this case, $8,920.94. Okay. You should have $8,920.94 in the bank. Okay. Now we need to also update our sales, right? So sales for the medium coffee cups. How many cups did we sell? You say 240? Okay, so 240 for a total of $477. Hold on, am I on the right one? Okay, so 477 and 60 cents. Okay, so what's my grand total? What's my grand total sales for my medium regular coffee?
4276.51.
Good. What about my sales for the large regular coffee? It's 28. Did I put 28 for this one? Yes, I did. It's 28. How many cups did I sell? 200. Good. For a total of 598. Okay. So in grand total, how much did I sell for my large regular coffee? 52.62. 40. Excellent. Good. How many cups for the medium supreme coffee did I sell?
245.
245. Okay. For a grand total of $610.05. 610.05. Okay, which gives me a grand total sales for my I don't know how you got that answer. I got 5. Yeah. Okay, so 54, 38, 16. Yeah. Okay. And then my large supreme coffees, how many did I sell? What was that?
101.
201 for a grand total of 701.49. Okay, 60, 55, 15. Good. Okay. We got ceramic coffee mugs that we sold as well. Okay, how many ceramic coffee mugs did we sell?
5.
We sold 5 for a grand total of $34.95. 15.43 and 30 cents. Good. And last but not least, we got to enter in our sales tax. Okay, so liabilities, right, for in our in-store sales on the 28th. Which gave us a grand total of $199.82. Okay. So how much sales tax did I collect in grand total? $1636.59. Okay. In this case, we end up using 40.5 pounds of regular coffee and 41 pounds of supreme coffee. So in this case, all right, got to update my inventory because I used 40.5 pounds of regular and 41 pounds of supreme. Okay. Starting with my regular coffee. Right, I used 40.5 pounds. Okay. Right now, my cost per item is $1.648333. So what's my grand total cost of goods sold here? $66.76. Excellent. Okay. So if I had 96 and I used 40.5, I should have no 96. Yes. No, 55. This is, okay, because we have 96 right now, minus 40 and a half. Right, so you should be with 56, but because you have half right there, it should be 55 and a half. All right, so then if you sold $66.76 worth of regular coffee, how much should you have for your total inventory? How much should you have left?
140.
Yeah, 91.48, yes. Okay. So you should have 55 and a half pounds left at 91 and 48 cents. Okay, so you end up using 66 and 76 cents worth of regular coffee. Okay. Your Supreme coffee, we end up using 41 pounds. Okay, so let's take a look at my inventory. Okay. Which batch of inventory I'm going to sell out from first? This, yeah, we're going to get rid of our 16 at $1.85, which is the $29.60. Okay. Okay, so I can get rid of this 16 pounds. Okay. And how many more do I need to get to sell 41 pounds?
29.
Okay, so 41 minus 16, 20. I got 25.
Oh, oops.
Okay, so I need to sell 25 more pounds to get to 41 pounds. In this case, I only got one batch of inventory left, so it's at $1.89. Okay. So in this case, how much is my total cost of goods sold if I sold 25 pounds at $1.89? What was that? 47.25. Good. So in this case, I need to update my inventory. Wait, so I'm going to add these two numbers together because it's going to give you my grand total cost for selling 41 pounds. So I got a grand total of $76.85. I need to update my inventory because I just sold 25 pounds. So in this case, I'm down to my 100 pounds at $1.89, which should be $198. Sorry, $189. Okay. So, right, we're down to our last 100 pounds. Okay, and in grand total, for using 41 pounds, I got a total of $76.85 for my Supreme coffee and $66.76 for my regular coffee. Okay, $66.76. $76.85. Okay. Now we need to update our inventory. Okay. Starting with the cost of goods sold. We used 40.5 pounds of regular coffee for $66.76. Okay. Which gave us a grand total of cost of goods sold to be
$11.28.27.
good. 1128.27 is good. My Supreme coffee, I end up using 41 pounds. For $76.85, which gives me a total cost of goods sold to be $11.94. Good. $11.94.50. Last but not least, we need to actually update our inventory. So here we are, regular coffee. For using 40.5 pounds and using up $66.76. What's my grand total ending balance in my regular coffee account?
$91.48.
$91.48, which we already know matches my inventory on hand, right? $91.48. Okay. All right, we gotta update my Supreme coffee because we used 41 pounds, which cost $76.85. So we should have a total of $189 left, which that is true, right? Because we have 100 units left at $1.89. Good. All right, so we're done. We updated our inventory. We finished our sales. Okay, so let's see what happened next. Okay. So now it's time that we pay Irene and Albert for their paychecks. Starting with Irene first, right here we have information about her W-4. In this case, right, her name's Irene Jameson. Okay, how many days did she work? She worked 8 days, so a total of 64 hours. She's single status. Okay, and she claimed 0 withholding. So that means there's nothing to withhold. And of course, this is her primary job. She's probably a young person, right? So primary job, no extra withholdings, and no extra income, not married, she's single. So in this case, right, what do we do here? We need to calculate her total amount of payments here for working. Okay, so she claimed a total of 64 hours. So, how should I journalize this? What am I going to be needing to calculate? Say that again? Can you repeat that again? Sorry. Can you say slower too? You said something expense. What kind of expense?
Payroll.
Payroll expense. Okay. Now, in this case, let's take a look at our chart of accounts. Do we actually have a payroll expense account?
No.
We have, yes, we do have a payroll expense, but what are we breaking it down into? We are correct here. It is a payroll expense. But how am I paying her? Am I paying her as a salary and wages expense, a commissions expense, or is this payroll taxes? How am I paying Irene?
Is it the salaries and wages?
Salaries and wages expense is correct. So in this case, account number 6810. Okay. So date here is 28. Salaries and wages expense. Account number 6810. Okay. What else would I need to include as part of the responsibilities, or in this case, what do I need to take away from her paycheck? What does she have to contribute from her paycheck?
Federal tax?
Federal income tax. What else? Social Security. And what else? And Medicare. Good. So in this case, right now, she's giving, in this case, as a company, it is our responsibility to take that out of her paycheck. Now, does that tell me that I have to pay the government right away?
No.
No. So if I don't need to pay the government right away, what does that become?
A liability?
A liability. So in this case, let's take a look at the liabilities. What liabilities do I have here for the payroll? Right? What do I have here? Okay. You said we have to take out federal income tax, we have to take Social Security out, and we have to take Medicare out. So in this case, OASDI is another word for Social Security, HI is for Medicare, and right here we actually separated it right here. So we have employee FITW, we have employee OASDI, and we have employee HI. So in this case, $24.30, $24.40, and $24.50 is what she is subject to have to pay into, especially because she's not claiming any extra withholdings. She's going to guarantee to have all the federal income tax withholdings. Okay? So we have employee FITW payable. Okay? We have I'm just gonna and just fix them right here. So we have employee FITW, okay, OASDI payable, and then we have HI payable, which is Medicare. Okay. So that's the bare minimum of what we should hold off taxes for her, right? And then last but not least, what else do we need to do? We need to pay her. So we're going to be cutting her an actual paycheck. So checking. Okay? Good. So those are all the things that we need to have here. So this is 24.30, 24.40, 24.50, and 10.100. Okay? So let's go ahead and take a look at what her how to calculate her taxes for. Okay? Starting from your employee section, right? We have Irene Jameson. Okay? She has her pay rate's $8.50, okay, per hour. She worked a total of 64 hours. Okay, that's what it says here on her record here. Okay. And in this case, how much did she earn her gross earnings? $544. Okay. So, right? Her gross earnings is $544. Okay. And her marital status, she's single. How many withholdings did she have? 0. So in this case, right, number of withholdings amount. If she claimed 0, then she has 0, right? Because in this case, let's take a look at the chart here under the circular E. We need to know how many is one withholding. One withholding is based on the payroll period. So in this case, she's on a bi-weekly pay period. So that means one withholding for her is $165. If she claims 0 withholdings, then 0 times 165 is going to be $0. Okay, let me make sure that was 165, yeah. Okay. So that means her adjusted total amount, okay, in this case, right, withholdings, right, we look at how many withholdings there are, right? And so we're doing the 2021. Step 1 says determine what the gross wages are. Step 2 says determine what extra money that she's earned, which is 0, right? Any extra withholdings, which is 0. So in this case, right, she's going to take away 0 from her paycheck. Okay? So that means the adjusted amount that she's going to be subject to the taxes is going to be $544 because she claimed 0 for her withholding. So therefore, she's going to subtract 0 from her paycheck. Okay? So now let's go ahead and see how much she's going to be in when it comes to the circular E table, because this is the total amount that she's able to be taxed at, right? I've already picked out the correct circular E table, which is the biweekly payroll period, and she's a single person. So in this case, this is her table here. Now, how it works is we're going to see, so she earned $544. Is that more than $0? Yes. Is that more than $146? Yes. Is it more than $526? Yes. But is it less than $1,689?
Yes.
Yes. So in this case, she falls under this bracket right here, or in this case, this row here. She's going to automatically get charged $38 regardless of what she earns, right? So in this case, this is what the government's going to take is $38. She's going to get subject to 12% of any dollar in excess of $526 because in this case, the government will give her and let her keep $526. Any dollar over that will be taxed at a 12% percentage. So in this case, this is her bracket right here. Okay? She's going to get, so in this case, we need to figure out how much she's going to have earned in over. So in this case, she gets to keep $526. So 544 minus 526, how much in excess did she make over? 18. Okay? In this case, we're going to add what percentage? So in this case, we need to figure out what 18 and what bracket she belongs to. So what percentage are we going to be taxing her at? 12%. Okay? So that means $2.16. Okay, so 18 times 12% gives you $2.18. Let me equal around that. Okay? And then, of course, what was the amount that we have to withhold from her paycheck regardless of how much money she makes?
38.
$38. Okay? So in this case, what is her grand total amount that we're going to withhold from her paycheck? $40.16. Okay, because in this case, right, in excess, meaning any dollar that she's earned over, is going to be subject to a 12% tax. And then we're going to have to add the amount that the government's going to take regardless of what amount of money she makes. So in this case, you add these two numbers together to get a grand total of $40.16 as her federal income tax withholding. Okay? So then, right, we need to now calculate her amount of salaries and wages expense. So in this case, her gross earnings was $544. Okay? Her total amount of FITW, right, was $40.16. Okay? Now in this case, Social Security is going to be 6.2% of her overall gross paycheck. So in this case, what is 6.2% of her $544 earnings?
I got 33.73.
$33.73. Okay, good. All right. Medicare is supposed to be 1.45%. So in this case, how much is 1.45% of her gross earnings that she's going to contribute to her Medicare?
7.89.
7.89. So in this case, what is her net pay? Right? You have to take her gross earnings, subtract out all of the taxes to get her total net pay. So how much are we going to write a check to Irene?
462.22.
462.22. Okay? And we are on page, 18 in the journal? Yeah, we're on page 18. And now we need to cut her a check to know how much her check is going to be for. And it's going to be for $462.22. Okay? So let's go ahead and cut her check for the $462.22. Okay? So check register, it's the 28th. And we're cutting her a check for $462.22 to Miss Irene Jameson. Okay. So now I need to put this number into my description so I can plug in all my numbers here. Okay. So we cut her a check for $462.44, right? We also had Medicare to be $7.89. We had Social Security to be $33.73. And our FITW, Federal Income Tax Withholdings, was $40.16. So in grand total, what was her total? Her total salaries and wages expense.
The 544.
Her gross earnings of 544, which in this case, whoops, equals some. Okay. Whoa, 544.22. Let me see. 4016, 3373, $7.89, and $162. Oh, whoops, I put 44. 462.22. There you go. To give us a total of $544 even. Okay. Let me make sure I didn't make that same mistake in my check. Okay, 162.44, 162.22. Ah, see, I even said it. All right, so good. So now we can pay Miss Irene. Okay, for her paycheck number 1528. Okay, it's up to you if you want to add. She worked 8 hours, 64 hours, whatever, 8 days a week. It's up to you. Okay, so in this case, right, how did I figure that number out? Well, if you remember the calendar, right? If you remember, she started to work on the 14th, okay? And she ended the payroll period on the 23rd. So 14, 15, 16, 17, 18, 19. Oh, she got Tuesday and Wednesday off. So she took the 19 and 20 off. So in this case, she worked a total of 8 days, right? Saturday, Friday, Saturday, and Sunday. So out of those 2 weeks, she's only earned 8 days because we started her on a Friday instead of starting her on a Monday. So she missed out on Monday, Tuesday. Okay. So in this case, she worked a total of 8 days. Right? So there's that. We cut her paycheck. Now what do we need to do? Yeah, we got to do the ledger. Okay. So starting with salaries and wages expense. Okay, salaries and wages expense. Right? You only have Irene that's working, so you can just put Irene. Okay. For a total of $544. So therefore, $544. Okay. We have some federal income tax withholdings that we need to collect from her paycheck. Okay, so starting here. Federal employee, federal income tax withholdings. So it's commissions right here. FITW, 24. Whoops, 628. Irene, she owes $40.16 to federal income tax withholdings. Okay. Next is OASTI, which is her Social Security, which is 6.2%. All right, which we know it's for Irene. Okay. Which we owe $33.73 to, which is $33.73. Okay. Her Medicare, right? Irene, we've calculated it to be 1.45%, which gave us a total of $7.89. Okay, $7.89. And then last but not least, we need to cut her a check. Okay. So we need to update her the checking account because we paid her $462.22. So 28, check number. You could put paycheck. Irene, number 1528. Okay. Journal 18, and we wrote it for $462.22. So how much money is left in the bank?
8458 and 72.
Good. Excellent. Okay. So now that we calculated the taxes that the company is supposed to take out for having Irene as an employee, what else do we need to also do? Yes. What?
Unemployment insurance. We don't have to include it.
Well, that's exactly what we're going to be doing next, right? We need to also figure out what the company's responsibility is to cover for having Irene as an employee, right? What is the company's responsibility for having to pay for Irene having to be an employee? What is the company's responsibility? Use your chart of accounts to help you out. What are the company's responsibility?
They also have to pay their portion
Of
of the Medicare and the Social Security.
correct, right? Because that's the agreement to having an employee is you need to also match the Federal Insurance Contribution Act, which is FICA, which is the Social Security and Medicare. So whatever Irene put in, you must match it 100%. Okay, so we're responsible for also putting into the FICA. What else?
workers' comp?
We need to do workers' comp because what if she, burns her hand on making coffee, right? We need to be able to cover her medical expenses if in case that does happen. So we have to be responsible for paying into a portion of workers' compensation. What else? The company is also responsible to pay into
Yep.
The unemployment?
the unemployment, right? Both federal and state. Okay. So here in our chart here, so that's exactly what we need. We need to have all of these companies. So we're going to do company FICA, company FUTA, SUTA, and workers' compensation. So here in this chart here, we've already built the table for you. So in this case, Irene earned a total of $544. What was the total amount of Social Security? We already calculated that. That was $33.73. How much Medicare? $7.89. Now, FUTA, right? We learned in this class that FUTA, we're going to calculate it at 6%. So it's 6% of her gross earnings. So in this case, how much FUTA are we going to be paying into for having Irene as an employee?
$32.64.
$32.64. Okay. For the state unemployment tax, right? As a new business, which we are subject to have to be paying at a 3% tax rate. So in this case, right, that's what we learned in class, is because we are a new business, you're automatically having to pay 3% into the state unemployment. So in this case, it's based on gross earnings as well. So how much state unemployment are we subject to have to pay for having Irene as an employee? $16.32. And for our protection in case Irene decides to sue us for, burning her hand for making coffee, we need to put in 1.36% of her, or, that's how much we need to contribute to her to protect her. Okay, and protect us as a company in case she does come after us to help to make us pay for her medical bills. So in this case, how much of her gross earnings, which is, right, is going to be covered for workers' compensation? 7.4. Good. Okay. So in this case, what is the grand total amount of payroll tax liabilities that the company is responsible to have to pay? For having Irene as an employee?
I got 97.98.
97.98 is correct. So that's how much. So I'm responsible to have to pay for $544 plus an additional $97.98 for covering for her taxes as an employer, right? These are the employer's responsibility to pay into for having Irene as an employee. So let's go ahead and journalize all this information here, okay? And we're going to separate them into our, separate each one into the journal. So in this case, right, 28 for having Irene as an employee. What account am I going to be putting down?
Company FICA payable.
Okay, company FICA payable,
Company FUTA payable. SUTA.
company SUTA, and workers' compensation. So in this case, let me see what accounts those are. All right, so company FICA is 2460, 2470, 2480, and 2490. Okay. And let's see. What was FICA? FICA was the $33.73 plus the $7.89. So in this case, $41.62 of FICA. Okay. We got FUTA for $32.64. We got SUTA for $16.32. And we got workers' compensation for $7.40. Okay, in this case, that gives me a grand total to be $97.98. What account am I going to associate this with?
Checking.
Not checking. I'm not paying them now because these are all, and on top of that, I would not debit my checking account. This isn't money that I'm going to be receiving. This is money that I need to pay out to, but I'm not paying them yet. I'm choosing to pay them later on.
Accounts payable.
Not accounts payable.
Company liability.
Company liabilities. In this case, I already listed out my liabilities. These are all, what are these all called?
Payroll liabilities.
Payroll liability. So in this case, let's take a look at my expenses, because in this case, I had to incur this expense for having Irene, right? So in my chart of accounts, okay, is there anything that's remotely going to be what are these? These are liabilities, right? For what?
For the taxes.
For the payroll taxes. So in this case, payroll tax expense, $68.30. Right? These are the payroll taxes that the company is responsible to have to pay into for having Irene as a employee. Oh, I forgot the account number already. Payroll tax expense, $68.30. Okay, for $97.98. So in this case, right, I can make my note here saying this is for Irene. Okay, Jameson payroll tax expense. Okay. Right? So one by one, we need to update all of the accounts that are associated with this. Okay? Starting with our payroll tax expense, so operating expenses. Here we are, payroll taxes. Right, this is all for Irene.
pizza.
For $97.98 for the payroll taxes. We're on the new journal, 19. Okay. We're going to head on over to our liabilities because, right, we had to pay into company FICA. So $628 for Irene. For $41.62. Okay. We gotta pay for $32.64 of FUTA, federal unemployment. We pay $16.32 for SUTA. Let me fix that, sorry. Irene. Okay. And of course, we need to put in workers' compensation for Irene. For $7.40. And we are done with Irene, right? We did our employees' responsibility, right? What they have to pay into. And then we calculated what we have to cover for the cost of having Irene as an employee. We need to also pay Albert because he is a sales representative. He's a 1099 worker. So that means we are not responsible to pay a penny into anything that's remotely in regards to federal income taxes, nothing. He just gets a straight paycheck for whatever penny that he's earned. And since he's a 1099 worker, he's responsible to pay for his own taxes. Okay? So in this case here, we got commissions. Albert Allen is his name. He's earned a total of $14,168, which he gets 10% of, which gave us a grand total of $140.18, which is true, right? If you actually go down to your commissions, right? We made a record that this is exactly how much he's earned, $140.18. Okay? So in this case, right, how should I record the payment for Albert?
Commissions expense?
Commissions expense, right? Okay, commissions expense.
Commissions payable?
We're paying him now. We're not going to owe him yet. We're paying him now. So what would we pay? How would we pay him?
Would it be checking?
It would be checking. Yes. So commissions expense is $68.20. Right? Because we said that his payment that he's going to receive money from us is going to be the same day as the payroll period. So in this case, commissions expense was $68.20. Okay, and we're paying him $140.18. And like you said, how are we going to pay him? We're going to pay him by writing him a check. Okay, so it's going to be checking. So in this case, we need to go to our check register because now we're going to make a payment for Albert Allen for $140.18. Okay. Okay, Albert Allen. Okay. So we wrote check number 1529. Okay. So that's exactly what you're going to write. Albert Allen commissions 10% of sales. Okay. Check number 1529. Okay. For a total of $140.18. Okay. Let's go ahead and update our ledger. Okay. So we have another operating expense here. We need to pay into commissions. So once again, you can write Albert 10%, 10% of sales. Okay. For a total of $140.18. Okay. And because we made a payment to him, right, you can go ahead and say this is commissions check. For $140.18. So therefore, how much money should we have left in the checking account? 830.18, not 17. Okay. And last but not least, the owner, Bob Mason, says, I worked so hard in the last 2 weeks, so I deserve to pay myself $1,500. So Bob Mason withdraws $1,500 from the bank. How should you do this? How should you record this? Checking. Yes, he's going to take money out.
Owner's withdrawal.
Owner's withdrawal. Yes, it's going to affect the equity because remember, the owner can't work for his own company because he owns the company. That means anything that's in the company, whether it's profits, whether it's its investment, it's his money. So in this case, it's going to affect the equity account itself because he's taking money away from the company, okay, by paying himself. And that should be account number 32,000. Now, how is he going to take money out from the bank? What should be the best way to do it?
With a check.
You should properly cut him out a check so he can properly withdraw it from the company's bank and put it into his personal bank. So in this case, we're going to cut him the very last check of $1,530, okay, for $1,500 to Bob Mason He is the owner of the company. Okay, so 1530 is his check. So in this case,
And it has to be the account owner's equity, not owner's withdrawal.
oh wait, you're right. You're right. I'm sorry.
Oh, okay, okay.
Yeah. No. You're right. Sorry. I was thinking about it affecting the equity. My bad. Good.
For a second there, I thought it didn't matter. You could just use either or, but okay.
No. In this case, no. You need to specifically use the owner's withdrawal. Good. Yep. So owners withdrawal. Good. Account number 32,000 because he's withdrawing from the company. This is very important because when we finish up and actually start closing out our books, the very last step is to actually close out the owner's equity. I'm sorry, the owner's withdrawal out to owner's equity, right? Because in this case, right now, we just said that he just took money out. But in this case, we never adjusted the amount that my total equity is looking at right now. Right now, it's still right now because I haven't closed out my account yet and I still haven't updated my equity. It still says that I'm at 30,000. But in this case, I just took out $3,000. So I'm actually 3,000 less now. But I won't figure that number out until we, close out our books, decide whether we want to pocket that profit or do we want to reinvest it into the company. Okay? So this is important that you do keep it this way because that's one of the steps that we're going to be completing at the end of the accounting cycle when we close out our books. Okay? So good. All right, so now that I have my journal, and I cut my check out, let's go ahead and update my ledger account. So in this case, owner's withdrawal is first. Okay, it's the 28th. We used check number 1530. We're on journal 19. So in this case, 1,500 plus another 1,500 should give you a grand total of $3,000 that the owner has withdrawn already. Okay. And of course, we're going to have to update our checking account because the boss decided to take money away from the company, okay, to pay himself. Okay, so check number 1530. Which is going to decrease the account by 1,500. So therefore, at the end of the 28th, how much money should be left over in my bank account? 68.18 and 54 cents should be correct. Okay. All right. And this concludes the end of week 4, okay? Because now all we have to do is the trial balance, which this is actually going to take quite some time. So I'm going to stop here today, and when we come back tomorrow, we will go ahead and do the trial balance, okay? All right. All right. Any questions in regards to week 4 of journalizing our transactions? Okay, we're almost done. So again, we're going to complete the last 2 days and then we're going to start moving into the closing process. So steps 5 all the way to step 10. Okay, so any questions so far? What I'm going to do here is I'm going to make a little note here, block, or like, I guess, like a bar to represent that we are done with the week. And we're going to be completing our trial balance for week 4. Okay, just to ensure the accuracy of our accounting. Okay, so save your work. Tomorrow we will finish up the trial balance. We'll do